we see that stocks are up big for the day on Thursday. 20-year bonds down just a little bit, gold up just a little bit. If you haven't purchased our book, please do so, Charting Your Way to Wealth. It explains in detail what we do here at the channel. We also have lots of good training free at the website chartingwealth.com. And if you're a big supporter, you can go to Patreon and you get all sorts of great benefits by supporting us there with your donations, including we have a great Q&A that we do once a month where we go over the stocks you're interested in, charting those. And we also, if you go into that intermediate level of support, we call you and spend 15 minutes a month with you on the phone to help you figure out what you're doing, where you're going, put plans together, and meet those goals. Now remember, we're an education firm, not a stock calling service. We ask you to practice trading with us every single day for just a few minutes. 10 minutes is all we ask. Okay, let's jump into these charts. We see that the S&P 500 up decently for the day, 1.04%. Might be ending the week with almost a doji here, tending down because it's a red doji. Derivative oscillator still negative, losing downward momentum. That price percent oscillator still heading down. We go from the weekly to a 2-day, and of course the first day of this latest 2-day candle is down. Looks like the price percent oscillator trying to head up to cross over, going up again. Hasn't happened yet. We'll see how things happen on Friday when that candle ends up. The derivative oscillator gaining upward momentum. And as we look as to what really happened in the day, we break the day into two parts on these 4-hour charts. Big down morning, up afternoon. Derivative oscillator losing downward momentum, price percent oscillator heading up, but has not crossed and has some ways to move before crossing. But again, remember, we had that crossover back earlier in the week on Monday afternoon, that jumping in point sometime on Tuesday. I don't like using the Heikin Ashi candlesticks to tell you what the entry point actually was, but it opened somewhere around 274, and of course the low in just a day and a half, 267.01. That's pretty nice movement in there. So we see, again, hasn't crossed over going up yet. If you're in that move and haven't taken your profits, do keep an eye on that green candle, almost a little green spinning top there. Indecision tending up. But again, it's a green open box candle, which does portend some strong movement. We'll just continue. But that's on our smallest chart. Remember, all things being equal, the markets tend to move in the direction of the largest chart, which is decidedly down. So we go from the S&P 500 to the Qs, the NASDAQ 100, bigger down candle for the week as we can see a solid red candle with a decent sized wick on the bottom. Derivative oscillator still very negative, losing some downward momentum. Price percent oscillator still spiking down. Go from the weekly to the 2-day. Looks like we could be going into a third down candle on that 2-day chart. Price movement below the weekly trend line. Derivative oscillator is positive. Price percent oscillator is heading up. So again, keep your eye on things. That candle will not be drawn until the end of the day on Friday. 4-hour chart shows down movement in the morning, but completely preceded by up movement, or succeeded by up movement in the afternoon. Derivative oscillator losing downward momentum. Price percent oscillator heading up. So keep your eye on the prize. Had a great jumping in point somewhere around the opening level of 170 with a low all the way down to 163.46 on those Heikin Ashi candlesticks. So keep your eye on things. Don't lose what you've gained in those practice trades, but don't pull out too early either. All things being equal, market tends to move in the direction of that largest chart, which is down. We go to 20-year bonds. What do we see? We got a little schizophrenia going on. Big charts down, medium charts up, means we don't have a trade at this time. We do see the derivative oscillator losing downward momentum. Price percent oscillator has a ways to go before it can cross over going up on the weekly chart. But have we pretty much hit the bottom on bonds for now at 112, almost 113? Maybe so. We'll wait and see how things play out, but keep your eye on the prize. Of course, as we go from the weekly, which is confirmed down, to the 2-day, which is confirmed up, We may have a bottom there, and there may be enough up movement over the next week or two to pull that weekly chart around. We see the derivative oscillator gaining upward momentum on the 2-day chart, and the price percent oscillator heading up. And again, could be going into the third 2-day candle, 6 days of up movement possibly. We can see what happened throughout the day. Well, in the morning, up movement, bit of a pairing off in the afternoon with a red spinning top means indecision tending down. Price percent oscillator still managing to move up almost flat. Derivative oscillator losing upward momentum. So we'll just watch, keep the powder dry, see which way things go, and whether the weekly follows the 2-day or the 2-day ends up turning back around and following the weekly. We're going to let the charts guide us because guess what? We're trend followers. You can't make the chart do anything. You can very wisely follow the direction of the chart, which is what we do, and it works time and time and time again. What do we see on the weekly chart on gold? Gold up for the day, just barely 0.11%. Again, looks like we've got things moving down as far as this looks like it'll probably end up being a down weekly candle, hoping that gold, where it had bottomed out around the 113 mark, was going to be a strong bottom with lots of up movement in gold. Went up for 3 weeks, then sort of sideways and down for the last going on 3 weeks. Derivative oscillator peaked back on the week ending the 2nd of November. Been going down since then. Derivative oscillator, that's the derivative oscillator. Price percent oscillator was flat last week, going up a little bit this week. We'll just continue to keep an eye on the prize, see which way things go. Gold is still in a confirmed up move on the weekly chart. We go to the 2-day, confirmed down move there. Strong down candle for the 12th. Then a 2-day up movement on the 14th. And so far, some indecision, really a green spinning top, indecision tending up. What we see on the latest, first day of this latest 2-day candle. Derivative oscillator still gaining downward momentum. Price percent oscillator still heading down. So again, that schizophrenia, that difference between the weekly going in one direction, 2-day in the other, means that we don't have a trade at this time. We can see on the 4-hour chart, big up movement in the morning, paired off some in the afternoon. So we'll just watch and wait and see how things set up for us. Are things bottoming out around the 113.45? Maybe so. And we'll just see if there's enough up movement to turn that 2-day chart around. If there is, it could put us in line for more up moves on gold later, perhaps next week. That's where we end the day, my friends. Again, if you want to support us with Patreon, please follow the link and do so. You'll find that in the show notes. You also find the links to purchase the book in the show notes. And we have some special trainings for you on the price percent oscillator and some great trainings on trend lines. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.